Hey guys, welcome back to Finance Fruition. This is Candace speaking. So today we're going to walk through on how to create a pro forma income statement. These statements will be used and created by the company, and it will definitely help them to figure out what their sales, what their costs will be in the future. So they're very helpful to understanding these figures. So I'm going to read through the question and then we'll jump into creating the income statement. The 2020 income statement for Tammy Corporation is presented below. Based on conversations with the company's management and industry statistics, you anticipate sales growth from 2019 to 2020 to be 12%. Lower raw materials prices will cause cost of goods sold to decrease by 200 basis points as a percent of sales. Essentially, that means the cost of goods sold will decrease by 2% as a percent of sales. In addition, in order to better position the company in the long run, R&D expenditures as a percent of sales will increase by 100 basis points. Again, it will increase by 1%. Depreciation will increase by 15% due to stringent cost containment procedures. As a percent of sales, G&A expense will fall by 100 basis points. The company will borrow an additional $20 million at an interest rate of 8%. There will be no change in shares outstanding. The majority of the proceeds from the debt offering will be invested in new technology. However, $6 million will be used to pay off existing debt with a 12% interest rate. For 2020, the average tax rate will be the same as in 2019. You feel the stock should be selling at 15 times the forward earnings. So we're going to create a 2020 pro forma income statement to estimate the earnings per share and calculate the intrinsic value. So as you see, we've already got a little bit of information down for creating the 2020 pro forma, just basically taking all the information from above and putting it into the Excel sheet. So to find our new 2020 sales, predicted sales for 2020, we're going to do 300 million times 1.12%. Since here, as we stated, you anticipate sales growth from 2019 to 2020 to be 12%. So we'll put that right there. So that'll be 300 million times 1.12%. Now to calculate our cost of goods sold, we are going to do 336 million times 0.38, and that's how we find that answer, is by doing what 120 million as part of 300 million would be 40%, as stated in the problem, that the prices will cause cost of goods sold to decrease by 200 basis points as a percent of sales. So as a percent of sales in 2019, 120 is 40% of 300 million. It's going to decrease by 200 basis points, which means 2%. And now we can calculate our answer. So we'll do 336 million times 0.38, and that will give you your cost of goods sold. Next only thing we do is easily subtract these numbers from each other, and now we can move on to the next step. So to calculate our G&A expense, we are going to do, again, they stated that the G&A expense as part of percent of sales. So when you do 60 million, part of 300 million would be 20. And we said that it is going to fall by 100 basis points, which means 1%. So it's going to fall to 19%. So the way we're going to calculate it, we're going to do 336 million times 19%. So your answer would be 63,840,000. Next, we're going to calculate our R&D expense, And it's the same thing as a percent of sales. So we do 36 million as part of 300 million, and that would be 12%. Now this time it says we're going to increase by 100 basis points. So it's an increase to 13%. To calculate this number, we're going to calculate our 2020 sales that we predict times 13%. And your answer is going to be $43,680,000. Next, we're going to calculate our depreciation expense. And for this one, we're going to go back up to the problem. And it says that depreciation will increase by 15%. So, it's really simple and easy. So depreciation is going to increase by 15%. So we're going to do $20,500,000 times 1.15. And that is going to be $23,575,000. Now this time, we're going to do the same thing, subtract everything to get our new answer. For our EBIT, earnings before interest and tax, we're going to do this. So our EBIT would be $77,225,000. Now, this is when it gets a little complicated. When you're calculating your interest expense, you're going to have to do some other calculations before you can get to your actual number, since we are also taking on $20 million at interest rate of 8%, and then $6 million with a 12% interest rate. So off to the side, we're going to, first thing we're going to do $20 million. And then put in our $6 million. Then we're also going to put in our interest rates was 8%. We can remove this bottom. So the way we're going to calculate it is we're going to do 20 million times 8%. So that'd be 1.6 million. And again, we're going to do 6 million times 12%. Be 720,000. So what we're going to do is subtract these two numbers. Now you have 880,000. Now we have to go back and see our interest expense in 2019 was 6.2 million. So we're going to have to add 6.2 million to 880,000. So we're going to add perfect. So our interest expense will be this number right here. So we can just plug that in right there. Perfect. Now we've calculated one of the hard things in your pro forma 2020 income statement. Now we can move on. And so now we can just calculate our EBT, interest before tax. So the way we calculate that is by just subtracting the EBIT minus the interest expense. So now this is your EBT. Next, we're going to calculate our tax. So what we're going to do is, let's go back to our problem. So we're going to find where we're going to do with our tax expense, how we're going to calculate it. So we can look at, see here, to do stringent costs. So we will see that the average tax rate will be the same as in 2019. So we can see to calculate our taxes, we're going to see whatever this is, a percent of this. So 17,190,000 is 30% of 57,300,000. So we're going to do the same thing on this side. So we're going to calculate 30% times your EBT. So as we see, our taxes would be 21,043,500. Perfect. And now we're going to just simply subtract. Perfect. And now next, we also discussed about shares. Let's go back to our problem. So it says that there will be no change in shares outstanding. So our shares outstanding is going to stay exactly the same. So we can just bring that number right on over. Perfect. And now we can also calculate our earnings per share. And we're just going to do that by just doing the shares divided by the net income. And we can just do it another way, divided by $1.51 approximately for each earnings per share. But we're still not done yet, as you say that you feel the stock should be selling at 15 times the forward earnings. So we're going to do 15 times. Perfect. So we see that the stock should be selling at 15 times forward earnings, so that would be $52.61. So we have basically just went through how to create an income statement for a new year, for next year, by predicting some of these numbers, some of these figures. So that is all I have for you today. Thank you so much for listening and tuning in into Finance Fruition. If you have any more questions, please ask in the comment box below, and please subscribe to my channel. Thank you.